Give us a sense, Sam. How do you see today shaping up? What's your WEX word of the day?
Well, my WEX word of the day is rotation. We've been seeing over the past week rotation out of the previous high flyers of communication services, consumer discretionary, and tech into the underperformers, the defensive sectors of consumer staples, energy, and utilities. So I think that is likely to be running its course.
All right, so you're mentioning that defensive shift. You ended on utilities. Utilities actually the best performing sector last week. What does that signal to you when it comes to the momentum trade that's really powered the market over the last year and change, where mega cap tech, whether you call it the Max 7 or the Fantastic Four, have really been the drivers of the market?
Well, I think investors are still willing to invest in the market, but I think that they, in a sense, are hopping from one overpriced lily pad to another that is underpriced. Right now, utilities are trading at a fairly sharp double-digit discount on a relative PE basis to the S&P 500. They offer high dividend yields and certainly some modest growth potential. And so a good place to hide out in the near term as the market goes through what I think is a traditional digestion of gains following the recovery of the prior bear market of 2022.
You know, Sam, you're really focused on valuation. We're going to get to your picks in a minute. Your picks are partly based on valuation. So when we're looking at valuation, you and honestly many people on Wall Street are looking at the market being toppy, frothy, whichever word you want to use. How important is tomorrow's CPI read? How important is the idea that we're definitely going to get those 3 cuts to the overall market and even the price action that we're seeing today?
Well, I think that CPI is something that investors will be focusing on. Our expectation is we probably will see a bit of a backup to growth of 0.4% versus last month's 0.3%. You remember that we did end up having a sharp decline after last month's CPI report. I think in the end, the longer term trajectory will still be downward for inflation. And as a result, the Fed will continue to, I think, be slower to lower interest rates. So they'll do so for the first time in June, 11 months after the last rate hike, which is traditionally the time span between those two. And then we'll probably see 3 total rate cuts in 2024 before getting additional ones in 2025.
Okay, so does higher for longer, does that continue to put pressure on the idea that these the valuations are just too high in your mind?
I think it certainly adds concern that the longer the Fed waits to start cutting interest rates, the increase of the likelihood that we could end up with a recession, even if it is fairly mild. Right now, I think the recession is off the table, but the longer the Fed waits to start to ease interest rates, I think is increasing investor concern.
All right, let's get some of your picks. We're going to show them right now. One of them is Walmart. The other one is a utility. We mentioned utilities, the best performing sector last week. And you're saying that part of the reason why these are your picks is that their valuations are off their highs.
Yes, well, being a fairly conservative guy, I guess I like to say that I wear both a belt and suspenders. So I look to those stocks that have good fundamental outlooks as well as good technical considerations. So from the CFRA equity analysts, these stocks, Walmart being one on the screen right now, is a company that has a favorable investment recommendation along with a good Lowry power ratings. So looking at fundamentals and technicals. Here is other companies would be information in the AEP, American Electric Power, also taking a look at Targa Resources, which is a transportation firm. So essentially, these are companies that have good upside fundamental potential that are being supported by good technicals.